Wages start to climb more steeply. We're seeing that in Germany, for example. One serious criticism of the ECB's program is that it is effectively only subsidizing the southern crisis countries. The central bank has pushed interest rates down. Without this lifesaver, Italy would have gone bankrupt long ago and the euro would have been history. Hold on a moment. All have benefited from the measures. The savings for taxpayers resulting from lower interest rates were nowhere as high as in Germany. But isn't it also true that the ECB is indirectly financing governments here? Any creditor who invests in Italian or Spanish government bonds knows that the ECB will buy these bonds off them. The future. Even though I am not the strongest advocate of our government bond purchases, we do not finance individual governments with them, directly or indirectly. Our aim is to maintain price stability. Thanks to our bond purchases. Interest rates go down and loans become cheaper, primarily benefiting households and businesses. Besides, we have a very clear set of criteria for the timing, selection, and volumes of our government bond. Purchases. Our parameters ensure that the private market for government bonds remains intact. One sign of the continuing relevance of this market is the divergence in the prices for German, Italian, and Spanish government bonds. Another criticism is that the ECB defers problems rather than solving them. Owing to the low interest rates, cheap credit is even available to firms that are no longer competitive, and would otherwise have gone under long ago. These zombie firms tie up capital and employees, all of which is harmful to economic efficiency. We have only bought corporate bonds with high ratings. This has indeed improved financing conditions predominantly for the companies in question. But also indirectly for the firms with lower credit standing. However, banks lending to companies must take the risk involved into account in their financing conditions. So, basically, the higher the risk, the more expensive the loan. Moreover, European banking supervision requires more capital to cover the risk and looks very closely at credit standards. And indeed, not every group in the euro area can borrow for 5 years. At less than 3% interest. There are differences not only across countries. But also across firms within the individual countries. The role of government debt is now the subject of heated international debate. One argument. That comes up more and more often is that the significance of debt has been systematically overestimated. Large countries with their own central banks have no need to worry. Japan and the United States. Two countries that are highly indebted but nonetheless pay low interest rates, often serve as examples. That is impossible in the euro area. For purely legal reasons if nothing else. We have set maximum limits on the member states' levels of deficit. And debt. And the ECB cannot buy government bonds on the primary market, for example bonds which other market. Participants no longer want because of, say, doubts about the sustainability of a country's debt. We can only purchase. Government bonds on the secondary market to a limited extent and only if such a purchase is absolutely Necessary to maintain price stability. These are the legal conditions. And what are the economic ones? On the burden we are leaving to other generations. Øystein Olsen, Managing Natural Resources, Lessons from Norway speech by Mr. Øystein Olsen. Governor of Norges Bank, Central Bank of Norway. At the seminar preparing Mozambique for natural gas, Bank of Mozambique, Maputo, March 27, 2019. The fund was established in 1990, during Norway's deepest recession in the post-war period. Vital for ensuring democratic control and confidence in investment management. Looking ahead, Norway must now be prepared for a time when the petroleum industry is no longer expanding, but gradually declining. Richard H. Clarida, Global Shocks and the U.S. Economy speech by Mr. Richard H. Clarida. Vice Chairman of the Board of Governors of the Federal Reserve System, at the Euro area, staying the course through uncertainties BDF Symposium and 34th SURF Colloquium. Sponsored by the Bank of France and the European Money and Finance Forum. Paris, March 28, 2019. Good afternoon. It is a pleasure to be here at the Banque de France and take part. In this important symposium on the Euro area, staying the course through uncertainties, both in the financial, press and in international policy circles, one hears a great deal about the spillovers of U.S. monetary policy to other economies. One hears somewhat less, though, about how global shocks affect the U.S. economy. So, In my remarks today, I will discuss how the U.S. economy's increasing integration with the rest of the world has made it more exposed to foreign shocks, and I will focus in particular on the channels of transmission. Through which these shocks operate. I will close with a few words on current prospects. In which global cross-currents are again posing challenges for the U.S. economy and monetary policy. Greater integration between the United States and the rest of the world. The U.S. economy's integration with the rest of the world. Both in terms of trade and finance, has risen substantially over the past 60 years. Since the 1960s. Both U.S. exports and imports have about tripled as a share of gross domestic product, GDP, with their sum now about 30% of GDP, still relatively small by international standards, but certainly notable. Financial linkages have grown. Enormously as well. The United States has had open capital markets for a long time. But the sum of U.S. external assets and liabilities has grown from about 25% of GDP in 1960 to more than 300% today. And reflecting the greater integration of global financial markets, the correlation of U.S. and foreign equity and bond markets has trended broadly upward for several decades. Channels of transmission of global shocks to the U.S. economy. This increased integration I have described has heightened the exposure of the U.S. economy to external shocks. But what are the channels of transmission of these shocks to the United States? Corporate credit spreads, adding to the contractionary pressures. and 3 of our most recent FOMC statements have highlighted. Concerns about global economic and financial developments. Miguel Iserescu, Central Bank Communication as a Policy Tool, an ongoing challenge speech by Mr. Miguel Iserescu. Governor of the National Bank of Romania, at the 41th meeting of the Central Bank's Governors Club of the Central Asia. Black Sea region and Balkan countries, Istanbul, March 25, 2019. ***** as prepared for delivery. Distinguished audience. Dear colleagues, it is a great pleasure for me to address this distinguished panel on a topic that is both important and challenging for central banking. The session's title includes 3 key issues: effectiveness, knowledge and trust, all in relation to the manner in which central banks communicate their policies and actions. I would like to share with you some general thoughts regarding these issues, as well as the National Bank of Romania's. Experience in this area over the recent years. More transparency, commitments to views and practices concerning transparency and communication have evolved dramatically in the last decade. Not long ago, the conventional wisdom was that monetary policy makers should say as little as possible, take markets by surprise, and be rather cryptic. Things have changed. As the more independent central banks also became accountable for the public goods they were called to provide for. A credible and convertible currency, price stability, employment, and growth in other cases. Banking sector supervision and financial stability. People tend to take these public goods for granted. appreciating their importance only when lost. Clear communication of the central bank's objectives. Policy strategy and its decisions proved essential to anchoring inflation expectations and enhancing monetary policy effectiveness. However, most research works in this area show that increased transparency is not enough. A central bank must demonstrate commitment and ability to achieve its objectives through a systematic implementation of its policies. The markets and the public at large need to be convinced by central banks through consistent and effective words and policy actions. Formulated as plainly as possible, in order to build knowledge and confidence, all vital for an effective management of public expectations. Despite a growing recognition of the importance of transparency in monetary policy making, no consensus has emerged yet, either among academics or central banks. There is still debate. On what is the appropriate degree of transparency or the best communication path. So that the two factors can contribute to an effective achievement of policy objectives as well as an efficient market functioning. The best practice in the field depends inter alia, on the size, structure, and complexity of the economy, its global interlinkages and policy cycles. The monetary policy objectives and strategies, the political environment and institutional framework of a particular central bank, as well as on the extent and nature of uncertainty faced by policymakers. When assessing communication, one should take into account various economic, political and institutional factors in addition to the elements of uncertainty a central bank faces, no matter how modern the communication tools it employs. Thus, Central banks may implement, successfully, different communication strategies that may be appropriate. And optimal given the above-mentioned factors. As most central banks, including the National Bank of Romania, have opened up a lot in recent years, by reviewing, adapting, and refining their strategies, using modern and social media tools. An effective communication approach should always include a degree of flexibility in order to respond to a rapidly changing economic environment, exceptional circumstances, as well as the level and appetite for financial knowledge in the society. Forward guidance. The global financial crisis pushed central banks to expand and heavily use their monetary toolkits besides identifying new instruments for the more delicate financial stability area. One weapon in their arsenal. Involving a strong communication approach, was forward guidance. Which was put to good use in the monetary policy field as central bankers attempted to calm the markets, wisely exploiting the power of words. Forward guidance was aimed at improving monetary policy transmission by offering more than just a glimpse at the central bank's next moves, greater predictability of the reaction function or an associated timing. For the next actions enable market participants to better calibrate expectations. It worked in several instances. It also increased the initial framework to include, apart from the traditional policy rate, references to some other parts of the central bank's toolkit, asset purchases, offering markets nice hooks to cling on in times of stress. And heightened uncertainty. Was this a too adventurous path to embark on?